Good evening. This is the video newsletter for Buy Sell Short for Tuesday, November 30th. We're going to start today's video off with the US dollar. Here we're looking at the daily chart of the US dollar, and you can see it's been on quite a tear over the last couple of weeks. The low that was hit right here was right when the Fed QE2 began, when they said they were going to pump 100 or 800 billion dollars in new liquidity into the market. And common sense would tell you the dollar would sell off on that news. But look at this nice fat, 6 point move, almost 10% move, 8% move on the dollar since that announcement. And the reason, coincidentally enough, right when this happened, we had some news come out that was supportive of the dollar, i.e., the European crisis. If you have had your head in the sand over the last couple of weeks, they succeeded in causing a run on Irish banks and forcing them to bend over and accept bailout money. Now that the powers that be, the crook hedge funds who succeeded in doing this to a lot of banks in the U.S., and now just don't stop at banks. They have enough power now where their rumors can cause countries to go in default. Now they set their eyes on Portugal, just as I said they would a couple of weeks ago. And over the last couple of days, we had the Irish deal set on Sunday, which should have been good news, and then come Monday morning and then again today, Portugal's in trouble, and the same old happens yet again. The euro goes down, the dollar goes up, and the market doesn't like it. We had an initial sell-off, of course, on the data this morning. If we flip to the Dow 15-minute chart, and as I mentioned in the chat room, we had some very good economic reports today, and we've been starting to get some very good economic reports recently. Consumer confidence came out really good. Purchasing Managers Index was out and was very good. We've got FedEx and UPS saying things are looking really good on the shipment angle, and that's what you want to really pay attention to. But, we have this European issue. I did mention in the chat room, we had the same thing happen earlier this year. The economy was really starting to get some steam. We were looking good for a summer move. And then the European crisis hit and dried up all the liquidity, scared traders out, just scared people out of the market just because the headlines were so bearish. They're trying to do that again, and I don't think the Fed is going to allow it this time around. Fool them once, shame on them. You're not going to fool them twice. And what we saw in the market today was that Fed liquidity coming in and supporting the markets. And there are a lot of people out there, a lot of bears, a lot of shorts just thumping their chest right now. And going back to the US dollar chart, you can see we're right below the 200-day moving average, and that has been resistance and support. It gave us that bounce in August and was unable to break back above it in early September. So I'd be very surprised if we see the 200-day moving average break this time around. I'm actually thinking we're going to see the dollar reverse course. We've got the unemployment report on Friday, the jobs report. I think the number is going to come in better than expected. And the reason being, retailers are hiring a lot of people for the Xmas season, and that counts in the jobless number. So I think we're going to get a better than expected jobless number, and we're going to start to see that reflected in the market over the next couple of days. So I'd expect to see some sort of bogus news come out tomorrow that sells the dollar off, and that's good for the market. Speaking of contrarians out there, Neener, one of these doom and gloom clowns who for some reason continues to get press, was out today, saying the market was going to 5,000 down the road. The reason for his thinking was sunspot activity. There's that sort of nonsense out there right now that should give you some comfort in the market, at least in the near term. Plus, the action we're seeing in a lot of stocks is not indicative of a market that's about to sell off. I mean, we've got low flow garbage running up big. We've got biotech starting to get some nice moves. There's uranium stocks have been on a tear. So there is momentum out there. And when you see stocks moving like they have been moving over the last couple of days, not what you would typically see before the market's going to implode. It's actually what you would expect to see before we go on a fat little bounce. Back to the daily chart. Resistance right now, 1150. Daily chart gives us a better idea. It's not, the most bullish setup, I will agree. We've closed 2 days below the 50-day moving average. We're threatening to break down here. But really, the market powered back nicely today. And the reason we actually had that late day sell off was just more bullshit. You've heard all the news lately about WikiLeaks, releasing all those documents about the government. They've said they've got some dirt on a U.S. financial, a bank, and of course, going into the last 90 minutes of the day, the rumors surfaced that it was Bank of America, and Bank of America started selling off and ended up dragging the market down. At least that's the excuse they use. Tomorrow it'll be something else. But, we really need to see the market bounce above that 50-day moving average tomorrow, 11,068. SMH has been giving off some steam, but it's still above the uptrend line, the 20-day exponential, and our uptrend line here. So, again, we'd like to see some follow through to the upside tomorrow to get a better feel on the market. Stock plays. NEI just set up perfectly here, in my opinion. Like I said, when I was pounding the table a couple of days ago, chart looks ripe. We're about to get a positive MACD cross on NEI. And over the last couple of weeks, while the market was selling off, NEI held its lows. Fell asleep, volume dropped, and over the last couple of days, it's starting to build just like it did the last couple of times it had a positive MACD cross was right when we saw that range move up to the 168, 169 area. So that's what we're looking for near term. Stochastics moving up nicely, positive ADX cross. If we follow the same path that we did on the last couple of moves, we should see a big up move, 5 to 10 cent daily move over the next couple of days. So love the setup here. RSI also breaking up through 50 and looks really, really good to here. I will be adding any dips under $1.50 on this one because this one looks golden, especially if the market does go into a bounce like I think it will. URG, our uranium plays, just a fat little monster winner for us. We jumped into this one. We've been playing it over the last few days in the chat room. I did send out the alert today on it today. Broke out through new all-time highs. And again, this is another example of that $2 strategy I've been mentioning. And it works especially well on stocks that are freshly broken the $2 level. And as you recall, when a stock breaks 2, typically 90% of the time it sees 210 to 216. This one ended up trading as high as 229. Like I said in the video, I will be looking to accumulate this one on dips. This is a theme that's probably going to be in play for a long time. And just look at the volume action on this one over the last week or so. Really, really bullish. CYTR. Biotechs all of a sudden are back in play, and that is fantastic for our overall market outlook. When you see action in the biotech stocks, and when you see ridiculous 100% moves in some of the plays, usually a sign of biotech momentum, and that in turn is usually a sign of speculative money coming into the market. Both bullish events as far as I'm concerned. CYTR, this one is about to break out on its chart. As you can see, we're going back here. We've got 6-month resistance here at 106. Would look to see that break tomorrow. And target is we're looking for 115 to 120 plus as our first target on this. PARD, an old friend of ours, has been just beaten over the head like pretty much every other small cap over the last couple of weeks. But as you can see, the chart action mirrors what we saw in August. I had that big sell-off in August. Then we had the market rallying in September at the beginnings of the rally. Same sort of setup here, beaten down over the last month. We're trading under cash value here. RSI in the basement, stochastics in the basement like before. A snapback bounce at least to the 20-day exponential. 43 cents to 45 cents plus would be our first target on this one. Stops 34 cents, but I'm thinking, traders are starting to move into the biotech stocks, and we're seeing a lot of the hard to move bios actually move, like SNSS over the last couple of days. If that stock can move, this stock definitely can put on a move. TRID, been disappointing over the last couple of days, especially from that breakup, but the market hasn't been helpful. Did hold that 182 low from the breakout move last week. So green market, this one will go. This is a stock that trades in tandem with the market. So market up tomorrow, we should see this one back in the 190s. LVLT, we had a fat gain on this one a couple of weeks ago. Stock has retreated on the overall market. Huge volume today on this one. Got a little bit of press arguing with Comcast, who's trying to, circumnavigate the net neutrality laws, and LVLT stood up for themselves. Chart looks pretty bottomed out here. We could see a nice little move. We'll be looking to possibly add this one under $1, $1 and under. You can place your stops at the 50-day moving average at 96 cents, and a snapback move to 110, 115, not out of the question, especially given stochastics. And check out the on-balance volume here. This is definitely a tech play that could do very well over the next couple of months. Speaking of bios with ridiculous moves, ICGN had news that they got a $1 million milestone. $1 million now, mind you. Market cap up, $8 million intraday on a crazy low float move. This is day 2. Ideally, we'd like to see this one gap again tomorrow and be looking to short it or short a breakdown at 2. This one's going back under $1.75, but this is the kind of action. Another one that did similar move today, ASTM, another biotech, nice little bounce. We had RPRX. Pull that chart up here as well. Another low float biotech bouncer. So biotechs look like they're back in play. So we're probably going to be looking to jump into some of these over the next couple of days, especially if we see follow through tomorrow. So that's it for the video. Going into tomorrow, still pounding the table on NEI. Should be a very nice mover in the near term. And we'll be looking for dips on URG to add. And then CYTR, PARD are our biotech plays for tomorrow. And, that's pretty much it. Again, if you have any questions, feel free to shoot me an email or hit me up in the chat room. And I will see you guys in the morning. Good night.